US Central Bank issued OMO Treasury bills to mop up 268 billion naira from a very liquid interbank market. The elevated liquidity has been the main story of the money market over the last few weeks, and Kizito Odunze, a bond sales analyst at Don Lauren Merrifield, joins me now to discuss the latest news moving Nigeria's fixed income market. Thank you so much, Kizito, for joining us. So like I mentioned, that has been the big story. We've seen that elevated liquidity over the last couple of weeks, and the big question is what happens next? We've seen the central bank come to the table and mop up aggressively last week. How do you see things playing out this week?
Well, as I said, thank you for having me. You rightly mentioned that the system is quite liquid. Throughout last week, the system had over 500 billion, and interbank overnight rates and OVB rates stayed almost flat at 10.5 and 10.25. Interestingly, however, this week we noticed that the system liquidity seemed to have dropped a little bit to about 356 billion. This has seen the interbank and the overnight and OBB rates spike by about 50 basis points to 11 and 10.75. Now, the question remains whether this drop will continue into the week. However, there's also information where we expect a certain amount of inflow from OMO bills maturing an excess of 182 billion, and also a certain inflow expected from the central bank regarding capital projects to the tune of about 160 billion. So right. Even though there has been a dip sort of in the liquidity levels, there are more expectations of more liquidity coming to the system.
All right. Now, so what happens next, though? What are the options left for the central bank? We know that mopping up using OMO is expensive, and many people suggest that that's the reason why they introduced that cash reserve ratio, that special cash reserve ratio on public sector deposits. And we've seen in the past that they've also issued special OMO bills in the past to mop up excess liquidity. Do you think this is something that the authorities may begin to consider, given the fact that we've seen this elevated liquidity for quite a while now?
Yes, well, it's very likely that that's an option the CBN would follow, because for most people it's obvious that the CBN would tighten further, if anything, at the upcoming MPC. The OMO activities have not been extremely successful. For instance, about 50 billion was offered today, and there are not much sales done, if any at all. It's intuitive that the CBN, given the fact that the system is still as liquid as it is now, despite the introduction of this 50% CRR on public sector funds, would want to further tighten and mop up more efficiently. So a combination of possibly of, as I said, special OMO bills and maybe a tweaking of the CRR gambit, the CRR move, to probably increase the CRR on public sector deposits, or maybe increase the CRR on a bit on private sector deposits might come into play. But as from where we stand now, it's just a conjecture.
Well, it will be interesting to see if that plays out. I think a lot of people will be frightened about the prospect of more tightening, especially with the CRR. But very quickly, if you can just give us your thoughts about the T-bill market. We know that there's an auction this week. What are your broad expectations, very quickly?
Okay, the T-bill market and the bond market, we observed a bullish run throughout last week, which sort of waned towards the end of last week, and there was an increase in yields from Friday coming up to today. Well, over last week, we observed a drop for bonds, a drop in yields of as much as 27 basis points on some maturities and 47 basis points on some maturities. Apparently, the coming in of funds from the PHCN privatization process, from the power privatization process, has brought in funds into PFAs. So, and these guys are major movers of our market, and there's also been some renewed interest from foreign investors. So there's a bullish run that seemed to retrace today due to some expected profit taking, but there's expectations that the bullish run will continue.